You're thinking of buying a house, but you've been told that you need to save 20% of the purchase price first for your down payment. With today's housing prices, that would mean saving up tens of thousands of dollars before you could even think about buying a house. It's daunting, but is it really true? Do you need to put 20% down to buy a house? The short answer is no. In some cases, you can even buy a home with no money down. And many homeowners who have good credit have purchased homes with a down payment of 3, 5, or 10%. In this video, I'm going to explain what you need to know about down payments and look at the pros and cons of putting 20% down. Stick around to the end of the video and you can find out what percentage of homeowners actually put 20% down. My name is Jay Troutlowen. I am a Minneapolis realtor and an expert at helping buyers and sellers navigate the Twin Cities housing market. A 20% down payment. That's the holy grail that many financial advisors and dads everywhere will tell you that you need to buy a home. But why? Well, there really are some benefits to putting 20% down. First, you may get a lower interest rate on your mortgage loan. The larger your down payment, the less risk there is for the lender. So paying 20% or more of the purchase price upfront in cash may get you a better interest rate. And even small changes in interest rates can add up over the life of the loan. Second, the larger your down payment, the smaller your monthly mortgage payment. I mean, this just makes sense, right? The more cash you put down on your house, the less you have to finance with a mortgage. So third, almost all lenders require borrowers who put down less than 20% to buy private mortgage insurance, also known as PMI, to protect the lender's investment. This private mortgage insurance is typically between 0.5% and 2% of the loan amount, and it's added on top of your mortgage payment each month. So, for example, if you were going to purchase a $350,000 home with 10% down, that's $35,000, and you had a 30-year mortgage at 6%, your PMI would be about $150 a month on top of your monthly mortgage bill. Now that's $150 a month you could spend on something else. And finally, having 20% down can actually make for a stronger offer when you do find a home you love. For sellers who receive more than one offer, the buyer's financial position can really make a difference in terms of which offer they choose to accept. So there are benefits to having a 20% down payment, but you don't have to have 20% down. And there are some benefits to buying a home with a smaller down payment. The biggest benefit to a smaller down payment is that you can probably buy a home sooner. And that means you can also start building equity in your home sooner. Let's go back to that $350,000 home. By the way, that is the median price of a single-family home in the Twin Cities right now. To buy that $350,000 home with 20% down, you'd need to save $70,000. That is a lot of money for most people. It is for me. But what if you were to put just 3.5% down? You'd need to save $12,500. Now, for many people, that is a much more manageable amount. You will be paying more on a monthly basis in terms of your principal and interest payment, and you will have to pay the PMI. But the good news here is that once you have 20% equity in your home, either because your home's value has increased or you've paid off 20% of the principal of your loan, you can request your lender remove the PMI. It is not a forever thing. For some buyers, another benefit of having a smaller down payment is that they can keep some of their savings for other things, such as home improvements, family emergencies, or just as a financial safety net. And if you're renting right now, the benefit of a home with a smaller down payment is that you will be no longer paying rent. Your monthly mortgage payment will go toward building equity in something that you own, and that is a nice benefit. So let's talk now about how many buyers actually put down 20% when it comes to buying a home. According to the National Association of Realtors annual survey of homebuyers, 56% of homebuyers put down 20% or more, but that means 44% of homebuyers are putting down less than 20% on their home purchases. So I hope this video has been helpful for you. Before you make any decisions that would affect your financial future, please speak with a qualified lender. And if you're interested in learning about how you could get up to $17,000 in down payment assistance, check out my next video in this series where I talk about the down payment assistance programs available to you if you live in Minnesota. So thanks for watching. My name again is J. Trout Lowen, and I'm here to help.